what I've seen is that um, when you begin trading, you need to understand what it takes. Okay, especially when you take a free class like this. Most of the time, people don't understand what they are getting, and for that reason, they may not utilize it very well. All right. If you pay 500,000 naira or you pay $500 to take the same class, you'll take it probably more seriously. All right. But what I think is that even if you don't pay anything and you are given a class to attend, it's always important that you realize the importance of what you're getting for free so that you do not eventually uh, underutilize it. And then eventually you are going to go elsewhere and probably go and pay more for it or pay more for it in one way or the other. So it's very important that as you take these classes, you go back and you put in the work, practice it. Right? Usually when people tell me, they want follow up and all that in terms of how they are doing with trading, or I follow up with them, what they are doing with trading. Many times is the issue is always the fact that you do not put in enough effort. Because here's the thing, right? All these things we learned the other day, they are very, very, very important. And there are things that can easily go away from your mind. By the way, we post our videos on YouTube now, so you can always go there and watch it again. Right? So there are things that you can easily go away from your mind. So it's important that as you learn them, you go back and you study them by actually um, going back and going over and over again, understanding it very well. So yeah, Emmanuel, you're raising your hand. Yes. What do you want to say? What do you want to say? Do you want to type it or you want to say it? Okay. Yes, you can get access to our copy trading. Who's your account manager, please? Oh, nice. Ijoma is great. So what you do is you will reach out to Ijoma. You tell Ijoma that while you are learning to trade, you want to start using copy trading to make money. Ijoma will guide you as to exactly how to do it and who to copy. Okay? So reach out to Ijoma immediately after this session so that you will be able to get started with that. Like I said, we call it the Earn While You Learn program. So as you are learning, you're also earning so that you are seeing the results. You're seeing some results. And then in many cases, we find that those who started like that eventually transition into trading by themselves well. Because the truth is that trading by yourself is actually where the biggest profit is. It's more like when you are it's basically where the biggest profit is. But there is a process to getting there. The process to getting there. So any from any other thing like copy trading and signals is not less of value. No. It's just that eventually when you become a good trader on your own, you'll have more opportunities and be able to do whatever you like and all that. Yeah, yes. But then it's important, first and foremost, when you come to the markets, two things you need to be earning, you will need to learn. You need to be earning, you need to be learning. So reach out to her, tell her that you want to begin learning. Okay? Um, so let's go over things what we talked about the other day, and we said that there are different types of trends. Okay, we said we have the uptrend, and during the course of an uptrend, you're looking mostly for buy trades. And we have downtrend. We have a downtrend, and in a downtrend, you're looking mostly for sell trades. Then in a consolidation, remember we have three types of trends. We have an uptrend, a downtrend, and a consolidation. Uptrend, a downtrend, and a consolidation. So in an uptrend, you're looking mostly for buy trades. In a downtrend, you're looking mostly for sell trades. And in a consolidation, which is the creation of a support and resistance system, right? Something like this is what we call a consolidation. Let's see. Looks as if price is stuck in one place. But when it comes to an uptrend, you see price moving clearly in one direction. Clearly in one direction. You can see clearly that from here to here, from here to here, price is clearly moving upwards. That's the movement of price. So price is moving from a low level here to a higher level here. But then it moves in waves, doesn't move in a trend in a straight line. This is what you call an uptrending market. The market is moving like this, that's an uptrending market, right? Now, if the market is going like this, so if the market is doing this, it tells you that you are in a downtrend. Market is trending onwards. That's a downtrend. Okay? It started from a high level here, is moving down to a low level here. This is a downtrend. This is a downtrend. Now, that is what a downtrend is. And we said in a downtrend, you're looking mostly for sell. Mute yourself. You're looking mostly for sell trades, right? All right. So when you are, please mute yourself. You can't be making sound while we're in a class. Please just mute yourself so that you listen to me so you don't distract us. Thank you. All right. So now you see we're in a downtrend. When we're in a downtrend, price is moving from a high point to a low point. That is this is a downtrend, and we're looking mostly for sell trades. Just like when we're in an uptrend, we're looking mostly for buy trades. Now, consolidation is something like this. Price is moving up and down within a range. Within a range. We call this a range. It's like a sideways movement. We also call it a sideways trend. Price is moving up and down within a sideways trend. Now, that in that case, we ask, what should we be doing? Buying or selling within a consolidation? What should we be doing? Mostly, we should be waiting for price to do a breakout. So I'm just recapping what we did last week. So we should be waiting for a breakout. When price breaks to the upside, remember we said that the top level of the range is what we call a resistance. Top level of the range is what we call a resistance. The bottom level of the range is what we call a support. Okay. And then the way we find support and resistance levels is by marking the swing highs and swing lows. I'm sure we mentioned that. Swing high, swing low. This is a swing high. When price moves sharply up and comes down, that forms a swing high. When price moves sharply down and goes up, that's a swing low, right? It's a swing low, right? So when you mark the swing highs and swing lows, you are able to find your support and resistance levels. And then you notice that price continues to hover between that support and resistance, up and down like that, and at that time, when that is happening, there is no clarity as to what to do next. No clarity. No clarity. Where is price going to go? You don't really know. Where is price going to go? Is it going up? You don't really know. Is it coming down? You don't really know. And why is it important to know where price is going? We've said it before. that when you come to the market, the first thing you want to find out is the direction of the market. That's the first thing you want to find, the direction of the market. If you don't get the direction of the market right, then you're not going to be able to trade. And even if you place trades, that's when you see a situation where you enter for buy is a loss. You enter for sell is a loss. Any kind of trade you take is losing. Why is it losing? Because you don't know where the market is. It's not where the market will go in the next 2 minutes or 3 minutes or 5 minutes or 1 hour. No. What is the overall direction, the actual market direction on the charts? That's what you're looking for. When you get the actual market direction on the charts, then you are clear now where the market is going before you start looking for where do I enter the market? See, the market is going to go down. How do I enter? Where do I enter? See, the market is about to buy, it's about to go up, right? Where do I enter? How do I enter? This only comes after it becomes clear to you where the market is going next. Now, this is the reason why we are concerned. What happens? Because if price is within a range, it is unclear to us where the market is going. It's not clear. Is the market about to buy? We don't know. If the market is about to sell? We don't know. That is something we don't know. We have no idea what to do next. We don't know. We don't know. So the only way we will know is if we wait for price to get out of that range. We wait for price to break out of that range, then we can get an idea what price is about to do. If price continues to stay inside this range, we have no idea where is it going to go. It can go up or come down. There's no predictable way. There is no way to fully 100% guarantee that it's going to go. Of course, when you, in the course of your learning to trade, you start to gather a couple of confirmation tools, which means that these are tools that you need to chart to be able to give you extra level of confirmation, extra level of confirmation. So if you're thinking that the market's about to buy, you need to have strong reasons why. Why do I think the market is about to Why do I think the market is about to sell? Those are things you will now be able to understand. But even then, there is no trade or there's no trade that is 100% guaranteed. So the probability of that trade working out can be very, very high, but yet it is not 100% guaranteed. Okay? The only person that is 100% guaranteed is God. So as long as you are not God in the market, you are still going to have areas. Okay. So now what you are looking for is that when price breaks to the upside, now you are in play again. When price breaks to the upside, now you are in play again. You are in play again because now you can see, okay, there's clarity. Price has gone to the upside. Now I can look for more trades for the buy. I can look for buy trades because I can see it's clear to me now price is going higher. I can look for buy trades. Now, if price breaks to the downside, if price breaks to the upside like this, we call this a breakout structure. Okay? Remember these levels here that you join together, these highs that you join together is what we call a structure. Highs and lows that were formed here are called structure. When you join price together, when you mark up the chart and check where price are reversed from, right, it will literally form something like a structure. So that's why we call it market structure. Okay. Now, when price breaks out of this structure, we call it a breakout structure. When price breaks out of this structure we're talking about, we call it a breakout structure. So then we have what we call a bullish breakout structure and a bearish breakout structure. A bullish breakout structure means that price broke resistance and moved higher. Price broke that resistance and moved higher. So if that happens, then you know that price is about to continue buying. If price breaks the support and continues, price breaks the support, that means that price is about to continue buying, selling. If price breaks support, that means price is about to continue selling. And if price is about to continue selling, that should give you a bit of confidence as to where the market direction, what the market direction is. and what you should be doing next. In this case, we already said that if you're looking at if price is coming down, you are expecting to sell. If price is going higher, you're expecting to buy. So now let's look at when when price has been in an uptrend, like I mentioned the other day, these are called structure. So when price breaks out, we call it a breakout structure and all that. So very important. That's what breakout structure is. Now, there's something else you notice, right? So this is price, right? Moving up, there, it's going that. And you now see that at the point price does this. So what happened here is this. Price was initially buying. Price was initially bullish. Price was initially bullish. Price was initially bullish. Can you see? That was price going higher, going higher, going higher. Normally, price is supposed to do this. Price is supposed to do this, come down here, hit this level, continue going like this, right? So that it forms a clear reading. So it forms something like this, a clear reading that prices continue to go higher. That's what you would normally expect to happen. But now let's watch something. Let's watch something. Like I said, this is so now instead of price to continue to hold like this on this trend line and keep going higher, what it does is it breaks out of the trend line. Once it breaks out of the trend line, it starts to form the pattern of an opposite trend. Remember, you were making a buy from here, you were buying, by any time price comes low, you buy like that. But here now, the market has shifted from bullish to bearish. Matter, the market has shifted from bullish to bearish. It was bullish, now the market has shifted bearish. Now you could be in a buy trend on the bullish side, and when you see that the market has changed, you get on the sell side. Get on the sell side, all right? Now, so let's check something here and show something here. What we want to talk about now is what we call a shift in market structure. It's called a market structure shift, or it's called a change of character. And what is a change of character? The change of character, you need to understand the change of character. You have to understand the trend you are in. You need to be able to see trend as a professional trader so that you understand what's going on. So price is bullish here, right? Bullish, bullish going up. So which means that when you see a breakout structure like this, remember, you see a breakout structure like this, price broke structure to the upside, that tells you that price is still heading higher. It's a sign that price is heading higher. So now we see that price broke there, and then price came here again and broke structure. So we have a breakout structure. Remember, price is going up. This level here represents structure. This level here represents a structure. Right? Just like you will hang if you're in a site where on a site where a building is happening, you put structures on top of structures. You lay bricks on top of structures. From the ground floor to the highest floor, you lay bricks on top of structures. That's just the way it is. And once a structure has been created, for you to be able to increase the size of that structure, you now can block or whatever it is, block or concrete on an already existing structure so that you can surpass the current structure. But then remember the current structure forms the basis, the background. So now if you see, there's a breakout structure here, there's a breakout structure here. Then at this point, price changes. Like I said that time, price will also continue going up. Since it didn't continue going up like that, we understand something about to happen. So what we do is that we come here, mark this. So we can see that price has broken through. Price has broken through the last support level here. Remember how these are support levels? This is a support level, this is a support level, this is resistance level, resistance level, resistance level. Then a support level was created here because every time price hits a particular point and makes a detour or changes direction, it forms a structure. Okay, like I said, it forms a low or a high, right? Now, that's what you're looking for. Now, when price comes there and then the previous structure that was formed, price violates it, which means price breaks it. So price might have done something like this, as- and then start going up, which is fine. But then, instead of doing that, price didn't do that. Price broke through. So when price breaks through, like I said, this is what we call this a break of structure, a BOS. Okay. Call this also a we call this a BOS as well, right? Because BOS usually happens when price is in a trend. BOS usually happens when price is trending in one direction. So if it's trending in one direction, remember we talked about bullish break and bearish break. That's what we are talking about now. So a break of structure here now is that price has broken through this price has broken through this structure here. All these structures have been broken through. So all of those are structures, all right? Now, once price breaks through one of them, it's significant. It tells us that price is battling momentum, go in the opposite direction. So as long as price is in the same direction going higher, we can have what we call breakout structure because a breakout structure continues. Now, when price changes direction and starts to break structure in the opposite direction, we call that a change of character. Here now, when price begins to stops breaking high, when price stops breaking high and going higher, and now you want to start coming down, reflect in the it will reflect on it will tell you a lot about what's going next, what's going to happen next. So that is what we call a market structure shift or a character change, also known as a change of character. So here now, this is the level that was broken, sharply broken. So we have what we call a change of character or a so you have what we call a either a change of character or a market structure shift. This is when the market begins to break levels now in the opposite direction. When market begins to break levels in the opposite direction, that's what we call a change in character or a market structure shift. Okay. Now you notice something after price broke the structure, right here, we see a market structure shift. then price makes a pullback again. Make a pullback again. When price makes a pullback again, that is telling you, okay, now I'm about to go in my new direction. It's telling you I'm about to go in my new direction. Then you now start to see breakout structure around here again. You now start to see breakout structure here again. You can see now market were moving in one direction, so we're seeing a breakout structure, breakout structure. At a point, the market did a change of character or a change in market structure, a market structure shift, and in that case, it started breaking structure again in the opposite direction. So this is what we call a break of structure and a market structure shift or a change of character. So here is what you do, guys. Like I was saying before some of you guys came, what you do is this. Once you come off a class like this, the next thing you do, once you are able to relax, is get your computer or get your phone and start finding every single thing I'm showing you here. That is it. This is not so it's not for academic learning. It's mostly for be able to make money, for you to be able to execute and practice and get something done. I was saying earlier, when you're on a demo account, you just want to practice a few things. Or on your live account, which you should fund, is when you start to and actually put your emotions to work. So you're not only, if you're on demo alone, you will learn things, right? But once you learn those things, when you come into the market, there have been people who they come into the market, then they thought, oh, I was doing very well in trading. And then they get into the market, the actual market and live account, and they think their results are different. Their results are actually not different. The only thing is that their emotions are now involved. If I place a trade on a Euro USD trade, for example, if I place a Euro USD trade, for example, and I have no money on ground, I have no money there, and I have no money on that account, since it's a demo account, I may even forget to go and check what's going on there. I may not even be able to study that market well that I'm trading. Because one thing is this: profits will teach you something, losses will teach you something in this market. Profits will teach you something, losses will teach you something. So you want to be able to get the lessons of today and move to the next, move to the next day, right? So it's very important here that you go back, sit down, begin to go through all these things so that you can use them for for your learning. Use them for your learning. Use them actually in the market. So let's look at something here. Let's look at something here. You can see, let's start from here. So let's start from where the market is right now. So you can see that price was consolidating here, right? That was a consolidation. Then once a consolidation is happening, you notice that there's a support, there's a resistance. That's the support and resistance. If I shift it backwards, you see it. So there's support and resistance. Okay, that's what was playing out. Then what happened? Price made a break to the downside. So you can see now, price made a what? A break to the downside. Once it broke down, it continued coming down. See that? Continued coming down. And once it continued coming down, it moved down, then it moved up a bit. Remember, this is how the market works. Market moves in waves. Market moves in waves. Waves. That's how the market moves. So if the market is moving, you see it broke out of the support here and then came all the way down. Came all the way down, pulled back a little. Guess what happened? You see that price moved lower sharply, caused a break of structure here. That's the break of structure. I don't have a tool here on the system that's drawing it. So you see, price caused a break of structure there, right? Now what happened? Price entered another consolidation. So in that case, you see that there's a consolidation here. There's a support and a resistance there. So you can see there's a support and a resistance there. Price was just hovering up and down there. And then what happened? Boom, broke through again. It broke through and then continued to move. Continue to move. This is another consolidation right here. This right here is another consolidation. But can you see price broke through that consolidation and started going up. Started going up. Okay? So it was going up. Remember, price doesn't move in straight lines. He made a pull back again. Then he made a break of structure. You see, break of structure. Why is he? This place right here, watch this. This place right here is what you call this is a break of structure because a break of structure is when market is moving in a particular direction. So this is now this you can see price move like this because of where it was before. Once it pushed down, it caused a market structure shift, change market structure. But then once the market structure is defined, the next thing you want to do is that you're going to wait for price to break structure. So what happened here now is that price formed this high again, made it back, and then came down sharply, breaking this structure. This is the structure now. Broke it. After I broke it, it continued to stay like this, continue to be in an up and down range. Once price moved out of this range, remember it has been a downtrend, right? Once price broke out this range, you see this support and resistance. Once price broke out of that range, this became a market structure shift, MSS. So a market structure shift happened around here and continued going up. Now you see price got into a consolidation again. Once price breaks out of this consolidation, that is a break of structure because price is already caused the market structure shift here. So when market shift in structure and and it continues to go in that direction, you can see break of structure along that direction. Price continues to break structure along that in accordance with that direction. But when price changes direction again, when price changes direction and moves from up down, then in first of all, when that first of all happens, you have a market structure shift or a change in character. Then subsequently, as price begins to go in that particular direction, you have break of structure, break of structure until it changes direction again. Then you have a change of character, right? So just like market change direction from here, we have a change of character and market structure shift. Remember, market structure shift and change of character are the same thing. So market shifted character here and then continue to be in a downtrend. So we're seeing break of structure here. After price broke structure here, remained in a consolidation. But once price broke out of here, that is a market structure shift. Market has changed from downtrend to uptrend. So continues like this, you see is in a consolidation, it breaks above, that's now a break of structure, it continues to go. Right. So this is what you will see in the market all the time, all the time, all the time. Just continues like that. So like I said, what you guys need to do now is this. Once you learn a class like this, it looks simple for you. It may look a bit complicated for you. Whichever way it looks doesn't really matter. What matters for you is that you are going to make time. These classes, like I said, we are putting them on YouTube now, but I'll see how we can do it so that we can have the class shared with you. But you should be taking notes. In a class like this, you take notes, you take screenshots and all that so that you can go back and do it on your own. You can't just wait and say, oh, they've not shared the recording. No, it's yours. It's your learning we're talking about here. You have to learn the right way. So when you go back to the chart, you are going to understand this better when you begin to look for these things to happen in the market. Okay? Now, there is a tool I'm going to give you that will show you market structure shift, breakout structure, and all that. But I will give that to you on the next class. I want you to practice this first. I want you to understand this first before I give that to you. The tool I'm going to give you. The tool is something that you can easily put on TradingView here like this, and then it will start to mark all these breakout structure for you and the rest. If you check, you notice that there's breakout structure, MSS, BOS on my charts. They are there. There's something that is drawing those things on my chart. I'll show you how to get it. So, but first and foremost, you have to understand what we are dealing with here in trading. Like I said, and when we started, you can begin to earn while you learn, which means that you use copy trading, start making money. You use our signals to start making money. Eventually, you are going to have to learn properly. But we want you to be able to start making money with the tools we provide so that you don't just sit around. No, you want to be able to fund your account and start earning some profit. When you start earning some profit, that will be encouraging for you and then to help you in your journey. So even if you're going to spend a couple of months just learning, you are okay because you know that Forex is paying you already. Okay. Forex is paying you already. So since Forex is paying you already, you can take the time, master it or learn it very well so that by the time you start doing it yourself, you have a good understanding of how the whole thing works. Right? This is where we're going to stop here today. Like I said, please go back, use this to learn, use it to learn, understand it by actually doing it. And also, if you really want to learn Forex, go to YouTube and find topics that have been addressed in class. You find other educators on YouTube who have taught these things. Take those classes, listen to them, and then they may help you. You may understand a bit more there. You may have understood a bit more here. Whichever one, you just combine. It's more like perspective, right? Different perspective. And then you're able to understand it very well because this drives to the core of how the market works. Okay. And if you are planning to really be a big time trader who makes good money from the market, who makes a full-time income from the market, then you have to, the only way to do it is, like I said, start by earning while you learn, then eventually you give your all into this trading journey because it can be very worth it. Like I tell people, if you master trading, trading will be the biggest thing you do up to where you are right now. Except you are Dangote and you own one company that produces billions and billions or millions of dollars a year. If that's you, that's fine for you already. You probably don't need to trade. But if you have a job, you're trying to get a good car for yourself, a house, all those things that you're meant to have, want to reach certain dreams that you have, forex trading can help you do all those things. But are going to have to do it the right way. You're going to have to fund your account. You're going to have to play straight. You're going to do copy trading. You are going to sit down and learn how to trade. Then that way, you'll be able to make it work for you. So I've just maybe a minute or two. Does anybody have a question? Just training videos. That's not what I wanted to do. Sorry.